share with you the best monthly paying dividend stocks, and I want to pose to you a challenge right now of finding the best monthly paying dividend stock, but it has to fit my criteria, and there's only 3 rules to this challenge. First and most obviously, it has to pay a monthly dividend. Second, it has to be green on the year during this crash we're experiencing, and then finally, it actually has to show some form of profitability, and you can let me know in that comment section below if I don't mention it in this video. But let's hop right into this.
Drop it.
Welcome back, my passive income investors. Chances are, if you're like me, new to the dividend investing community, you probably went on Google and searched, heck, what are the best monthly paying dividend stocks? And Google would present you with this list of companies that we're going to break down one by one. And at the end of this video, I'm going to share with you the only stock I have been able to find that fits all of my challenge criteria, which is obviously it pays a monthly dividend, it's profitable, and it is green on the year. And the most funny thing about all of this is that stock isn't in one of these lists that I have gone through, which is an incredible reminder. Google is not the best place to get investment advice. But getting right into this, ladies and gentlemen, let's start at the top of the list here with a company called Realty Income, which is a real estate investment trust. I have broken this down many of times in the past, and I am glad that Google put it at the top of the list because honestly, I think if you're directing investors, this isn't the baddest way to go, but it does not fit our criteria because it's still down 30% on the year. Realty Income has a 5.36% dividend. That is an annual yield that would get divided out and paid monthly. Now, a lot of investors flock to real estate investment trusts because they are famously known for paying monthly yields. But in recession periods like this, you find out why they're not always the best investments to make. Leading into numero dos, we got APLE Hospitality REIT here, ladies and gents. This would be a company that's in relation to when you're walking through the mall and you see those travel agent companies, you go in and they'll book your cruises and your trip. That is primarily what this REIT is focused on. And again, guys, paying a 13% yield. How reliable is that going to be with the hospitality industry not having a bright near-term future? I don't know. So I'm kind of interested that it is the second down at the top of this list. Moving into number 3, we got Main Street Capital. This is a financial company. So we're finally shifting into some different sectors here, ladies and gentlemen. But again, it is not green on the year. We're down about 30% with an 8% yield. Now, again, nothing saying that you can't do further homework on these guys and find what we call a value stock, because if I'm being honest, I think Realty Income is a bit of a value stock here. And keep in mind, I don't know everything about these companies. I'm just throwing it out here to you to show you how hard it really is to meet the criteria that I'm after, because man, oh man, I am greedy and I have high standards, ladies and gents. But moving into number 4, we got AGNC Investment Corp. So what is this one? Hopefully not another real estate investment trust. Oh, would you look at that? Yes, it is, ladies and gentlemen. Taking a look here, this is another one that's paying out a 10% yield. It's down 25% on the year, and I don't really know anything about it. So I'm hoping we can start shifting away from real estate investment trusts. So let's see what's next on the list. Here we go. We got Shaw Communication. Hey, we're finally in the telecommunication space here, ladies and gents. Scaling this out, unfortunately, it still doesn't meet the criteria because we're down on the year. But at the end of the day, this is a company paying a 5.31% dividend yield. It actually has a fairly reasonable PE, and with an $8 billion market cap, it's not exactly tiny either. Now, progressively over time, this stock hasn't experienced any real equity growth since 2007, but typically us monthly dividend investors don't really care as much about equity growth. But again, I'm extremely picky here, and I want a stock that is up on equity and it is still paying those yields. So let's continue our search. What else do we got here? We got Sabina Royalty Trust. So this sounds kind of interesting. SBR. Let's take a look here. What is this company? So it's a corporation. Clearly, it's some kind of royalty-based company with a 10.3% yield. Absurdly high and actually really low PE. But the problem is this is a really tiny market cap of $400 million, which might sound like a lot to you, but when we're playing in a pond with companies like Apple and Amazon that are worth trillions, I mean, this isn't even, this wouldn't even show up on an index if I'm being honest. I'm kind of taking a deeper look over the 5-year chart. Actually, let's expand it out even farther. Let's take a look at the max chart. Now, at least this company has been around post 1980s here. A lot of history in this company. It's always nice seeing companies that have a history that go beyond the 2000s because it gives you a little bit more reliability and trust that this company is going to be able to sustain going forward. And being in a royalty business, typically these are the kind of companies that do end up paying a lot higher yields because they don't have any overhead. They're usually licensed deals and they're just collecting injecting capital of some kind of company. I mean, I've seen this. We're kind of in the realtor realm, people buying and selling homes. I think we have companies in Canada called REMAX. And if you want to work for REMAX, you actually have to pay them, I think it's a yearly fee to have a license with them to actually sell or manage properties through REMAX infrastructure. So, I mean, there's a lot of different royalty companies out there, and I have to do a deeper dive into this to figure out exactly how they're making this money. But something tells me to be a little hesitant here because the company hasn't rebounded since it's crashed, which usually is a good sign that there might be some underlying issues, but just another stock that doesn't meet our check boxes. So going back to the list, what else we got? We got Pembina Pipeline, baby. PBA, if I don't screw that up. Let's take a look here. I don't think I looked up the right ticker symbol. Nope. So let's go back. Taking a look at PBA, ladies and gents, we're talking about oil companies now. Yes, there are a lot of oil companies out there that are fairly well known for paying monthly yields. We're not talking about the giants like ExxonMobil. I don't even think BP pays a monthly yield, but here's one, a really tiny company with no market cap as far as Google has to say, which is already a big red flag. But let's square it out on year to date. We're still down massively by the looks of it. This pipeline company's down 31%. And with how hard oil's getting hit, I mean, a lot of these companies are going to be terrifying to hold, and even if they're going to be profitable moving forward. So, I mean, it's already a big challenge, right? We're talking about royalty companies, we're talking about oil companies, we're talking about real estate investment trusts, and we have yet to find one of these top-rated monthly paying dividend stocks that meets our criteria. Now, I'm showing all of this to you as an example about how hard this really is and why you kind of got to expand your focus beyond these monthly yields, guys. I'm trying to teach you a good lesson here, but let's move in to the final one on the list. We have Stag Industrial. Now, this I'm already aware of because I've seen it come up many times in the community, and this is an industrial REIT, ladies and gentlemen. And the reason you kind of want exposure to industrial REITs is they're a little bit more cushioned against recessions like this. Now, industrial REITs are primarily companies that run factories and would rent to everything from auto part companies to God knows what else. And again, these are usually pretty safe companies. Taking a look year to date, guys, this company is only down roughly 18%. So it is definitely one of the better performing monthly paying REITs. Taking a look compared to Realty income, which is still down 28%. On top of that, you're getting a 5.68% yield, again, paid monthly. PE is a little high. Market cap is, fairly weighted, a little bit of a smaller REIT, but in the scale of REITs, it's kind of like a mid-tier. And just taking a look at the long-term history, let's scale this all the way out to the max. I mean, this is a company that has a fairly decent track record going all the way back to 2011. I would prefer companies that have had history back in the 2008 financial crisis, something like an Realty income has had, because that way you get to see how these companies manage through really tough times. And again, as an investor, it gives you a little bit more comfort deep down in your soul, knowing that there's a good chance they'll survive this current recession. But overall, Stag is the best monthly paying dividend stock I have seen out of this entire list. Now, is it best by balance sheet? It could be arguably against something like an Realty income. For our checklist, it's the closest to being green on the year. It's paying a monthly yield, and by the looks of it, it is profitable, guys. Now that we know how challenging it really is to find a monthly paying stock that is green and profitable on the year, I'm going to share with you the only one that I've been able to find. But before I do, I just want to share some light for you new investors out there that are kind of going down this path that isn't the best thought pattern to start, approaching the stock market with. Now, you can literally find a staggered amount of companies that only pay quarterly dividends, but they don't pay them on the same quarter. So you can end up owning really solid companies that'll pay in different months, but don't pay monthly. And now that might sound a little confusing, but it's arguably better to own something like a J&J right now than it's going to be to own almost any one of these monthly paying stocks, because J&J is actually holding up. This is a pharmaceutical company. It's worth $380 billion. It sits on the S&P top 10 list. And yeah, the dividend yield sucks, but this is like one of those stocks that is always going to do fine, even in the worst of times. This is a very challenging task for new dividend investors, because when you start buying into these monthly paying stocks that start trending downwards, you start regretting the fact that you could have just owned something like a Facebook stock. You would have got no dividend yield, but heck, on the year, guys, you'd be up 10, 12%. And I mean, go back over the long-term history of Facebook, no dividend yield, but over a 5-year rate of return, you're talking about 185%. Now, I'm not saying you have to own any of these stocks. I honestly recommend diversifying between all of them, but I'm just strictly focusing this on brand new investors that only want to make their first investments as dividend companies. Now, at this point, I'm going to share with you one stock that I actually hold that pays a monthly yield, is green on the year, and is actually profitable. And this is one that I can't find listed on Google Google anywhere, which really blows my mind. It is a Canadian stock, and it is called Northland Power. This is a company that I've held on to for the last 5 years of my entire investing career, and I can't get over the performance behind it. Now, the dividend yield has dropped drastically as the performance of the stock has gone up. My average yield on this right now is somewhere around 5.5%, and I'm actually shocked at the performance, considering if we look at the year to date, so far this is the only monthly paying stock I found that is up 12%. So it is actually up more than Facebook stock is, and you're getting paid a monthly yield. I mean, it's almost impossible to find golden gems like this, and I really want to know in that comment section below, what stock do you have that meets all of this criteria? I'm not buying any more of this. This is one of my largest positions. I currently have about $15,000 in this stock, and with a PE of 15, a $6 billion market cap, and being in the utility space, not only is this going to be a highly reliable company that is basically it's literally more reliable than real estate and royalties, because people need to keep their lights on. And on top of that, this company is poised to do very well in the future because they're highly focused on wind, solar, and gas. And that's, again, where a lot of attention is going. People are trying to move to more renewable energies. So this company's not only got a good face in the public, they've got a great performing stock that's reasonably valued. The dividend yield, I would say, is a little bit too low for where I would like it to be. If you can snag this one in the 4% range, you're not going to do any wrong. The last thing that I want to mention is if you are a US or Canadian investor buying real estate investment trust or these monthly paying stocks, be very careful because you might experience withholding tax, because unfortunately buying certain companies over the border come with a 15% tax. Now, not all of them, typically it's just REITs, but keep that in mind because I am kind of jumping across multiple borders here. But again, guys, I'd always love to know what you think. Slap a like, stay cool, stay awesome, and I'll catch you tomorrow.